Hey guys, welcome back. In today's video, we are talking about the reported FTDs, Adam Aron's plan, price glitch showing $1,400, and many more in this video. First, we take a look at this. All of the repeat spoofers report massive piles of FTDs on their books. Just the tip of the iceberg with all the secret funds they have, we keep shedding light on the darkest corners of Wall Street. So something that we're talking about on this channel and Crystal Ball has covered was the amount of FTDs that is seemingly increasing on the books for these firms. Whether it's their short positions, whether it's their FTDs, they are all increasing. Now, when you take a look at the price of AMC and of course GME as well, it's not a surprise that we're seeing their short positions and their FTDs increasing. Bear in mind is that is the main reason for why we are seeing the price of AMC to drop. It's because of the countless amount of FTDs, because of the fact they're able to short endless amount of AMCs without actually needing to locate the shares and of course settling their shares as well. And so that's what we are seeing. And again, this is why recently we've seen how the SEC didn't want to report the FTD data for GME. This is why we're seeing how they're opposed to the CAT system, which is showing and exposing their short positions. You can see anytime it's come anything to do with the transparency of short positions in stocks that are being manipulated, these institutions and hedge funds are extremely against it. And there's a very clear reason for obviously why that is. Now, further on more, I want to talk about in terms of what Adam Aron is saying and why I think 2025 will obviously be important. So you guys can see this. I believe I remain AMC's largest retail investor. I own 722,000 AMC shares and will invest in 1.2 million more AMC shares within 26 months, many by March 25. So I certainly feel and share in your pain as AMC share price has fallen in 2023 and 2024. I understand that it hurts. Now, I'm not going to come up with any, conspiracy theory or just whatever, but something that we have to understand is that obviously Adam Aron is also affected by the price of AMC. Now, and I want everyone to obviously take a look at it from a different perspective. Whether you think, Adam Aron is good for AMC or bad for AMC, look at him purely from a retail investor standpoint. If you owned a large amount of a company and you have the power to change this company for better or for worse, what would you do? You will obviously, and in my opinion, at least what I would do is obviously change it for the better, because that's what I'll benefit from the most. Now, with Adam Aron obviously being the biggest retail investor, obviously he wants to do better for AMC, whether that's fundamentally bring the price up, whether that's getting AMC to squeeze, because that will give him, multiple X returns with 722,000 shares. You can obviously see it when they're paying $1,000, $10,000 per share. You guys can obviously understand how crazy 722,000 AMC shares will be. And so it is in his best benefit for the AMC price to go up, and more importantly for the AMC's price to of course squeeze. And so this is what we talk about in terms of why I do think what Adam Aron is doing is obviously good for AMC, because not only does it benefit the company, but it also benefits him, as he does have interest obviously involved with this as well. Now, again, like I said, everyone will obviously have different opinions, and potentially some will question some of the opinions and actions that he's done in the past. But this is something that I want to talk about. I am curious to hear what you guys think, and especially understanding that he is the largest retail investors and obviously how it affects him as well. Now, so to talk about something, and is what we should obviously be worried about, or at least be on the lookout for, be cautious about, is the fear and greed index. Right now, we are at 33 out of 100, where this obviously equals fear. So 1 year ago, we were at extreme greed, and now we are of course at fear. And what we can see is obviously when we're in the times of fear, it means that the market is uncertain. It means that the market is likely to of course go down, that people are going to be selling, because it's obviously the opposite of extreme greed, where if you look at it a year ago, everyone was buying up stocks, whether it's the NASDAQ, whether it's the ETFs, whether it's tech stocks, AI stocks, or any stocks, people were buying them up. But now we're obviously seeing the sell-off. If you take a look at what's been happening in the market recently, we're obviously seeing the market drop. And so one thing to obviously be cautious for is the overall market sell-off. Now, that's both a good thing and bad thing. Now, the bad thing is that obviously if you have investment that are in the broader market, that in the general market, what you may be seeing is that to obviously go red as we're seeing people sell off. But what's good thing is understanding that when these stocks are being sold off, the firms that were previously using these assets as collaterals will also see a decrease in their value, and hence that's obviously good for us because we're seeing less manipulation and suppression. As always, none of this is ever financial advice, so do take our second and so make sure you do your own due diligence and research. But now let's take a look at this. The GME ask in after hours is showing 1,456.59. That's an oddly specific glitch. So once again, we're seeing, these glitches happening for GME prices. We've seen it happen a lot of times with AMC as well. Right now, we're seeing it with GME. Now, the reason why I think this is at such a awkward timing or an interesting timing is obviously because of what's been happening. Firstly, like we talked about, we are seeing the reports of how the FTDs, how the short positions are increasing at the very companies of the same short sellers of both AMC and GME. So that itself is already signaling something. Secondly, we obviously have the recent event with how SEC doesn't want to report the GME FTD data. And so when you combine all of this together and suddenly you're seeing this glitch of 1,456 asking price for GME, it really makes you wonder what is happening. Now, when you take a look at an even more in-depth look, and this is what I want to talk about, is you can see what Dario has said. I believe Credit Suisse will be soon forced to deliver the GME shares on the GME short positions they helped Archegos and fellow hedge funds to build, because the risk netting OTC derivatives they put in place that day will be ultimately due in 11 days. Now, this is obviously what he said. He said it's on January 2nd, 2025. And as we're going close towards that day, and just like he says, in terms of covering these GME shares, and remember, Credit Suisse also had the AMC positions as well. They inherited the GME from Archegos. What we are seeing is obviously the covering of these shares. So now going back to what we talked about here with how the GME ask is at 1,456, and you understand that they will be soon forced to deliver the GME shares, you can see how things are obviously starting to add up. But another thing in terms of talking about these glitches is understanding, we just talked about Credit Suisse. Now we obviously know Credit Suisse went bankrupt and it was obviously acquired by UBS. Now let's take a look at this. UBS charged with either failing to disclose or flat out lying to customers about average price paid for securities. FINRA has known about this issue since 2014. So it's fairly, clear what they're obviously doing in terms of their inaccurate average price disclosure. And this is something that's obviously happened since 2014. Now, what we can see is when you obviously are lying about the average price paid, when you're showing a different price, it makes sense to, what is happening with what we are seeing here. On the screen, we're showing that the price of GME is at 32, but really they're obviously paying at $1,456. Now, because of a glitch, it happens to show the real price. But when the system is going normally, when they're, succeeding in hiding up what they're doing, it's obviously showing the fake price of $32.83. Now, again, this is obviously just a theory, but when you take a look at in terms of, we just talked about Credit Suisse, and we understand that the very positions that Credit Suisse has acquired by UBS, and that UBS has a history of, failing to disclose or flat out lying, it makes sense for why we're obviously seeing this. Another thing to be looking at is breaking. GME has massive Chicago exchange trade again for $22 million. So, just like we talked about with everything that's been happening, just like we talked about whether it's with the glitch, whether it's with Credit Suisse, whether it's with UBS, these are all signs of, things start happening in the market. And we're also seeing these large value orders coming through. And so this is why we talked about, and it's understanding the fact that something is happening. And it's why we said that the fear counter is obviously going up. It's very likely we're going to be going into that extreme fear. And again, all of this will be a very good point for AMC right now, very good point for GME. I do believe if Adam Aron is able to captivate on this opportunity right now where we're seeing weaknesses in the capital, in the power that these hedge funds have, it could really explode. It could really make a massive impact. And especially when we understand that Adam Aron has more interest and benefits from AMC going up than any other thing else, then he would really try and take this opportunity, and is why I'm ready and why I think 2025 will be a very, very important year. You guys, thanks for watching. I'll catch you guys next time.